Hi guys, hope you're well. Looking into companies and analysing stocks is a passion of mine and a knowledge and skill set that I want to develop up over time. This channel, Stocks and Sharing, is based upon two elements. One, looking into individual stocks that I share my own personal opinion on, as well as looking through the data. And secondly, the sharing part is based around my own experiences within the market and what stocks I've been buying and selling, showing any profits or losses, and of course showing my dividend income payments coming through each month. If this interests you, then please like the video and subscribe to the channel. I'd love to have you along on the journey. Today's video is based around a Dividend King, which I personally haven't heard of until about last week. Maybe it's because this is an under the radar, some would say boring company, that will never make the headlines based upon smashing earnings, but this company is something that I feel can offer real stability within an income focused investment portfolio. Firstly, what is a Dividend King? Well, a Dividend King is a company who has increased their dividend payment for a minimum of 50 years. These companies can be argued to be the best of the best, but forward-looking dividends aren't always guaranteed, so it's super important that these companies can stand the test of time, and it's not unsurprising that in 2021 this list only had 31 exclusive members. The company I have for you today is Black Hills Corporation, who are a multi-utility company with approximately 216,000 electric customers in Colorado, South Dakota and Wyoming. The gas utility segment distributes natural gas to over 1 million customers in Arkansas, Colorado, Iowa, Kansas, Nebraska and Wyoming, and it does also have a small mining segment that produces coal. With the need of electrification growing, such as EV networks, this should play into the hands of well-run utilities like this into the future. Revenue within this company has been showing flat to modest growth, with revenue fluctuate between 1.5 billion and 1.75 billion within the last few years. Black Hills isn't a huge company in regards to other utilities, but this is testament to how well run this company is, that they've been able to increase earnings per share pretty much every year over the last 5 years or so, or even longer. Even through huge life-changing events such as COVID, Black Hills Corporation was still here performing the way that it's designed to perform: slow, steady and consistent growth. Looking into some of the key metrics around the dividend, it can give us an idea of how safe the dividend is and what potentially we can expect going forward. Dividend yield as of right now is about 3.6%, which is a very nice starting point. Payout ratio is pretty much bang on 60%, which means it's safe in terms of what's being paid out in current earnings. Utilities in general do offer higher yields and higher payout ratios than most other sectors. Of course, part of owning a company like this is how fast the dividend is growing, and over the last 5 years it's got a combined annual growth rate of 6.39%. Again, another impressive statistic for this small, well-run company. The starting yield, when you look back over the last 5 years to pre-COVID, it's only been at these levels on a few occasions, when it was briefly seen in this range in 2018, showing that this could be an opportune time to get involved. The yield has ranged from 2.5% all the way up to 4% within the same time period as the share price has been fluctuating. The next metric we want to take a look at is the yield on cost, which can provide information on what sort of potential results you can be expecting by holding this for the long term. This information only goes back to 30 years that's shown on the screen, but it still shows the picture that over a long period of time your yield on cost will increase, and if you owned this about 30 years ago, your shares could be generating over 20% from its initial cost basis. Something else to look at here which is important is not to overpay for a company. 20 years ago, which is likely when the dot-com bubble era was, you can see that if you bought it back then, your yield on cost would only be a fraction to what it was if you bought it 12 years ago during the 2008-2009 recession. Utilities won't give you capital appreciation, or will they? Well, when you look at this share chart, it might help change your mind. No, it might not give you 3 times your money in 12 months, but over long periods of time, the market seems to really like this stock, and on the whole, it's been moving up and to the right, which is what we like to see over periods of time. The market cap, as said, is quite small. It's only 4.2 billion, and with a PE ratio of 17, I think in this case it shows that bigger isn't always better. Balance sheet wise, Black Hills Corporation looks very similar to most well-run utilities. Overall assets do outweigh liabilities, with a consistent increase in debt pile and issuing shares to help fund investments into their infrastructure. This follows the same pattern as most utilities. Total debt here has been pretty range bound from 3.2 billion to 3.7 billion in recent years. What's been happening recently within the company? Well, on the 26th of October, they increased their dividend 5.3%, which is good news for long-term shareholders, with the company rewarding them candidly. They also beat on top and bottom lines. They also raised their lower end of guidance for 2021 earnings per share up to $3.85, up from $3.80. The CEO is Lyndon Evans, who was appointed in January 2019. When we look through his career, he has performed various roles such as COO from 2016 to 2019. He was also the COO of the company's utilities from 2004 to 2015, and he's also served as the Vice President and General Manager of the company's former telecom subsidiary. A long track record, and he's been developing himself over the last 20 years, showing parallels to Black Hills Corporation, and someone who has a lot of experience and loyalty to the company. At only 58, he could be the CEO still for quite some time. The financial outlook for 2022 is reaffirmed guidance of $3.95 to $4.15. From 2023 to 2025, you're expecting 5 to 7% earnings per share growth, and the good old dividend guidance is that it will be expected to grow over 5% through to 2025. As you may or may not know, utilities are under pressure to move to net zero to provide cleaner, more sustainable energy. Black Hills currently have 30% renewable energy within its electric operations as of 2020, with forecasting this to be 40% in 2030 and 70% in 2040. Natural gas by 2035 is expected to be 50% renewable. In the Q3 earnings report, year-to-date and year-over-year comparisons show that consistent improvement across the earnings per share metric here that we love to see. Just to finish off this video, it's actually 51 years of consecutive increases, and overall it's been 79 years where the company's been paying dividends. Super impressive. If you're a dividend investor, I think that this company will be right up your street and one I'll be looking into myself. I hope you've enjoyed this video with a brief look into this company. I hope you found it useful, and I'll catch you in the next video. Cheers.